So to start with, let's start with some market summary and facts updates. This year, the world's best performing major market is the Chinese stock market, specifically the A-share market, world's second largest stock market, represented here by the CSI 300 index, which reflects the performance of stocks in Shanghai and Shenzhen. It's up about 2% today. In fact, I'm also glad to mention that some of the major value partners funds are also back in positive territory year to date now. Although the US market has shown significant recovery in the last 2 or 3 months since March 23rd, the S&P 500 remains down 5% year to date, which is actually not a bad performance, all things considered. Currently, the valuations for Chinese stocks remain very attractive, especially when you consider that a V-shaped recovery, I think Luis will talk about it a little bit more later, is going on in China. You may have seen the news yesterday that from May, Chinese corporate earnings started going up again, a real recovery. Chinese stocks remain at a PE of 13.5 times earnings, with the biggest corporate earnings growth this year projected among major markets of 15%, as you can see from the table. So I think in terms of valuation, Chinese equities continue to lack the V-shaped recovery. As recently as April, people like me, for example, were saying that China is more likely to experience a U-shaped recovery. So we also have been positively surprised by the speed of the recovery. You can contrast that to the disconnect we are experiencing in New York, where American stocks are trading a PE of 24, which is very high by historical standards, even though the economy is doing very badly, with the US economic growth, according to the IMF, likely to decline by 8% this year. It's a real mismatch between the real world and the world of the S&P 500. For China, going back to the main theme, the COVID-19 pandemic seems increasingly more like a natural disaster, a huge natural disaster, but one that the country can recover from. In fact, Chinese GDP has resumed positive growth since the second quarter and is likely to go back to trend growth by the end of this year, resulting in an overall projection of 2% positive growth for 2020. It's the first major economy to recover. Some people call it FIFO, first in, first out. But I think one important point to note is that the Chinese recovery has been taking place without excessive and risky stimulus by the government and the central banks. This is a very important point because some of the recoveries you're seeing elsewhere in the world has been created by very risky and very extreme stimulus measures, but not so far in China. Having said that, if you look at this table showing the yield spread, US 10-year treasuries now only offer 0.67% yield compared to China 10-year treasuries offering 2.93% yield. The spread is at the highest since 2012. What does this mean? It means that China still has a lot of room for further stimulus, can cut interest rates further if necessary, if there are any unexpected setbacks. And also it implies that the value of the Chinese currency renminbi will remain well supported by such a big yield differential. I think basically my message is that the China growth story remains intact. One easy indicator, of course, is to look at the patent applications. Here we're using figures supplied by the Patent Cooperation Treaty based in Washington, using standard international standards to accept and process patent applications. Here you see that from 2019, for the first time, China overtook the US in the total number of patent applications. And in fact, in the last 5 years, there's been more than doubling of Chinese applications for patents, which is really remarkable at a time when the United States patent applications has dropped 7%. Here's another indicator that is interesting, which is that China has surged ahead of the United States in terms of engineering, and is also very close to overtaking the US in terms of natural science. In fact, we have other figures to show you that implies that in the subjects of science, technology, engineering, and mathematics, China now produces far more graduates than any other country in the world. This is well summarized by the following table, which is from HSBC, which shows that by 2030, China will be on track to become the world's largest economy. I think the headwinds for China are well known, including an aging population, increase in debt levels, and potential deglobalization or decoupling. And there are different measures being undertaken by the Chinese government to overcome these obstacles to resume positive growth, which we will continue to see. Now, the last point I would like to make before handing over to Luis is to talk about the overall global environment. This table basically shows you that there is a trend, which I think is going to continue to look for safe haven assets. Safe haven assets can be very broadly defined to mean stores of value like gold, which cannot be printed, unlike paper money, which can be printed. It can also include, to me, Chinese stocks and bonds, because China doesn't have the kind of social unrest that we're seeing in many other parts of the world. So basically, I think investors will be looking for safe havens and will be very wary of the politics of social unrest that is now going to be a continuing theme all over the world. Thank you.